Good evening and welcome to the Australian Stock Market Show. Now, with sellers exuding 2 weeks of consecutive pressure, are they here to stay for the month of November? Well, stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the All Ordinaries Index, and for our main topic in tonight's show, we get into unpacking the 3 most common trading strategies. Do they really work? First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Commonwealth Bank, Wisetech, S32 and the All Ordinaries Index, and more. So get comfortable as we'll get into those soon. I'm Gillham and I'm your host for tonight, and joining me are Wealth Within's highly team of experienced analysts and professional traders, Philip Tortevsky and Pedro Banyales. And together, we're Australia's most trusted stock market educators. Good evening, gentlemen. How are you?
Good evening.
Good evening, guys.
Cup day.
It is Cup Day.
Yeah.
And I expected you in top hats and tails and...
Well,
Yeah.
you can't say we don't put in the work,
Cravats
right?
Well, we can't say, no, I don't. I can never say you don't work.
We're still sobering up, so you know.
Welcome back to the show, Pedro.
Thanks, mate. Thanks,
It's
guys.
been a while.
It has, yes. I've been absent for a bit. Had some personal good news actually. So I'm a new father, so that's been very exciting. I'm still awake for the moment. I don't know.
Oh, well, we'll let you off on that one anyway. But Pedro will be back for more shows before the end of the year anyway. But tonight, as mentioned, we do get into the All Australian Index. But first, let's take a look at this week's hot stock tip. Now, Pedro, what have you got under the spotlight for us tonight?
All right, so tonight's hot stock tip is 3DA. So let's get straight into it. On your screen right now is market index. Now, this company is called Amero International. It's currently trading at 33 cents, and it's not making me look very good. It's down 1.47% today. So, it happens. So let's have a look at what this company actually does. So it focuses on high-value refractory specialty alloy in the powder production and additive manufacturing. So basically, it provides this for the defense, space and aviation industry. So I've slipped this one in while Janine has been away. So, it is in the military space, so she can't say anything. So, I reckon that we should probably...
She's probably watching and she probably will say something.
Well, let's
how about we go and have a look at the chart?
Okay, let's have a look at the chart. So now on your screen right now, on the left is the monthly chart, on the right is the weekly chart. Let's have a look at the monthly chart first. So I've put these levels on here. Now, these are very important levels for this stock, and our students out there, I'm sure that you'll know which levels these are that I've applied. So at the moment, this yellow line that you see here is the most important level for this stock. It's at 40 cents, and you can see that it's found some resistance back here in January 2020 when it first IPO'd, when it first came onto the market. And it's found support and resistance, multiple times along its way. And just recently, it's just struggling to get up there. You can see that the monthly closes just haven't managed to get on top of it. And it does look like it's trading down towards this other level here that I've marked, the 30 cent level, which could indicate a possible support level. Now, I'll quickly just get onto the weekly chart just to have a look at that price action, because it's interesting that it's had multiple weeks down there on the red, and it is heading to that level. It's found support back here in August. So I'm thinking that there's a few possibilities here. So it could find support here and then travel up to that level that I've marked there in yellow. Now, if we put a price range percentage tool, that represents about a 30% upside. If you were able to get in around that level. If not, if it does break that level, we've got this longer term uptrend line that, could possibly indicate a nice strong support level as well. Now, in failing that, we've got our last level here, which is that 20 cent mark. If that 20 cent mark doesn't hold up, then I'm thinking it's all over Red Rover. But if it does end up getting above that yellow line, I'm pretty happy with it.
You got anything to add, Phil?
Yeah,
He's taken over your role.
He really has. Yeah, look, a stock with the $200 million market cap, you've definitely slapped it in again, mate. I'm starting to think he's playing these ones under the radar, the small caps. But yeah, look, like the idea, the stock is consolidating sideways. So right now, I'd agree, it's got to get above 42 cents and see what it does on the flip side. But the chart does look beautiful.
It does look beautiful. Anyway, well, that is it for our weekly hot stock tip. Now, shortly, we're going to get into our topic for the night, but before we do, right now is your opportunity to get involved in the show and have your questions answered. Now remember, we prioritise phone callers, so call now on 0392909988, or you can text your question to the number on your screen. Now the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth, so make sure you pick up your phone now and dial 0392909988. Now while you do that, tonight we give you our thoughts on the Australian stock market, so let's get into that.
So on your screen right now is the chart of the All Ords Index, and I mean, look, we are starting to see some interesting movements with the All Ords, and I want to just focus on the weekly chart for now, because we are coming into a period where the market is starting to pull back now, guys. I mean, October was traditionally the weakest month of the year on our market, and we did see some downside movement. But I mean, if you just analyse the chart in a whole bigger picture, that downside movement really just looks like the stock is pulling back within trend. And more to that point, I mean, we're coming into November, which is historically an upward moving month, and December being one of the strongest positive months on the market. So keep in mind that when we're looking on the chart. So if we just go back to the chart itself, what we are seeing also now, it was expected that a pullback was to come. We saw 6 weeks of consistent rise leading from the 12th of September period. Now, we hadn't seen 6 weeks of consistent rise on our market dating back all the way to September 2023, believe it or not. It was always 4 weeks up, a couple of weeks back. So this was very well overdue, and coming in time with the fact we've got the big overhanging US election with Trump and Kamala there. But what's quite interesting, aside from the volatility that could be expected, is we have hit a level of support at 8,300. That is very important to keep an eye out right now. It's still early in the week. We always talk about waiting for that confirmation for price to shoot back on up. If we find support at 8,300, then best bets are we're going to break through to another all-time high very soon leading out of that December period. If the market fails, as you can see, we've got this momentum line through here, which it's crossed through in the start of November 24. So the next port of call would be to watch for support around 81.50. If we break below 81.50, then there is really strong support dating back. You can see all these significant levels, the lows tested in April 2024, which is back around that 7,900 level. I don't think we're going to get there in this instance down to 7,900. That would represent a very significant fall, not in line with what you would see generally in a bull market. But hey, you've got to play all sides of the situation right now. And so keep an eye on those levels on the chart, 8,000, 82 or 83 and 81.30. And as always, get your strategies right. And
look, I agree with you. I think it's just a pullback in a bullish market. But I mean, obviously there's talk around, if Trump gets in, the market's going to crash. And I went, let's just rewind back to 2020, to 2016, sorry.
Yes.
And I was saying exactly the thing back then, and it didn't actually happen. So I think there's probably a little bit of nervousness on the market at the moment.
Yeah, and he's pro-business, one. Keep that in mind. And also, he is also pro the fossil fuel environment. So I mean, that might translate, if it does translate into the materials sector, the Aussie one especially. I mean, we've got financials humming along, materials gets going as well, then we're going to see upside. Yeah,
we got into those a lot for our Talking Wealth members or viewers who are on Talking Wealth membership. We did get into that, or Phil and I did that on our yesterday's recording. So if you haven't seen it, get over to talkingwealth.com. Well, that is it for our weekly hot stock tip. Now, shortly we're going to get into our topic for the night. But before we do, right now is your opportunity to get involved in the show and have your questions answered. Now, remember, we prioritise phone callers, so call now on 0392909988, or you can text your question to the number on your screen. Now, our first question is regarding fundamental analysis, and it comes from Rob. He says, I'm starting to compile a list of stocks to enter, and when I check the fundamentals such as P, dividend yield and EPS, I find major difference in the numbers between CommSec and market index. Why is this so, and what's the most accurate source for me to use? Now we've got back on track. See what happens when Janine's not here?
Yes.
Okay.
Everything goes to pot.
The ship goes
Do you think she jinxed us from beyond?
Glad you said ship anyway. So how about we answer the question?
Yes.
Okay, all right. Well, yeah, I'll take this one. So basically, you are going to get a few discrepancies between the brokers, and that really depends on how they're calculating the PE and the fundamental data, and whether it's trailing data, whether it's worked out on the day itself, or whether it's is it backdated data. So really, you need to have a look at that broker platform and maybe call in or email in and ask them how they work that out. But I would suggest to pick one and just stick to that one, because if you're going to be going through different brokers all the time, then it's going to be, you're not going to make the right decisions. One of them might be a little bit higher, a little bit lower than the other. But basically, yeah.
Pay. I mean, if you really want to be secure on your data, you might have to pay for the data from reputable places to.
Well, if you want the best data, then pay for it. It's pretty much as simple as that. And the subscription fees aren't that much, are they?
No.
For Morningstar. Now, we're not talking about cheap stations. We're talking about $20 or $30 or $40 a month or something.
Yeah.
So if you're serious, then you just subscribe to it.
Yeah, and a lot of the brokers get their data from Morningstar, don't they? So it's
not as detailed as what you can get subscribed, because the brokers are giving it away for free. But yeah, I'd agree with you that.
Yeah, perfect.
Anything else you want to add, Phil?
Oh, no. Well, I mean, it's great that you're looking at all this information, but as always, fundamentals are one thing, and make sure you're looking at that chart, mate.
Yeah, that's it.
All right. Well, now we got an email from James. Keen on your thoughts around Aristocrat Leisure. You stated in a previous show that you anticipated it would peak around September to October, and interestingly, it has closed the second week just below a weekly uptrend line. Now, counter to this, however, it has also closed the week with the closing price being in the upper portion of the weekly bar, suggesting some remaining bullishness. I think it will pull back to around $50 before it turns back and becomes bullish again. I have my trading plan set, so this is not a should I sell question. However, keen to know where the stock may head next. I'm going to go to you, Phil.
Yep, all right, let's have a look and go straight to the chart of Aristocrat Leisure for you. Now, I've got two things with this one. The first thing is the application, or I guess the trend line itself. I've tried to mimic what you may have kind of looked to apply, but to me, the fact that the stock really did not struggle below this trend line was one cause to say that, hey, it doesn't really look like it's about to reverse. So to me, having a trend line along the lows more so, really hugging price in the sense that I've done it here on the chart, I would argue that would be the real gradient there. And then from that perspective, then the stock is still in trend. So
what is he saying?
Well, he's almost assumed that it's gone below a trend line, if you really go and try and cut through a lot of this price action up near the top. And it really hasn't given a clear signal breakdown through to say that, hey, the trend might be changing. But regardless, the stock is in a very nice uptrend right now. The second question with regards to whether it's going to pull back to $50, whilst I can see the idea behind the fact that the stock may be extended a little in terms of its upside movement, it does seem to look like this euphoric type buying. If we just stick to the monthly chart here and see, look how sharp that's gone up in that direction. I mean, it happened previously in March 2021, we saw a pullback, and also in May 2018. So I don't disagree that we are in an area with the way price action looks to be a little extended, which paints it in line for a pullback. But $50 in terms of the actual pullback, while it's not out of the equation, it's always about trading on confirmation.
Yep.
And right now there is no confirmation saying that this stock is pulling back at all. And so I would say potentially, if you're looking to, because it's one thing when people wait, say, I want this stock to get back to X dollar amount, and you lock that in your mind. And then you lock that in your mind and you potentially give up a very good opportunity to get back in if it doesn't get back to $50. So I would say really follow price and let the price confirm for you rather than having your set area of where you're going to get into the stock and really be so stringent on that.
Well, it's also to to a degree, how far it's going to pull back will depend on where it's in its cycle, on its yearly,
Well, that too.
2-yearly, 4-yearly, 8-yearly cycles, because obviously the bigger pullbacks happen at different times. And obviously looking at where it is right now, how big a percentage is a pullback to $50? Is it likely to do that? And that's where your price analysis works in with all your cycles and your pattern analysis, that sort of stuff. But from what I'm hearing from you guys, his trend line wasn't correct. So, because we can't see where he's talking about there, but you do need to expect a little bit of a pullback.
Absolutely.
And then you want to say, Pedro?
Yeah, I would just say, to put it simply, if price is going up, look for resistance levels. If price is going down, you look for support levels. So as Phil said, this stock is going up. So I would suggest that you focus on the resistance levels rather than what level it's going to pull back to.
That's a good piece of advice from both of you. Next email comes from Pete. He's asking about our thoughts on CSL. He said, I currently own the stock and purchased in July 24 based on the monthly chart. Just wondering if it's ever going to get out of this sideways range and find some upward momentum. October is looking better than September at this stage, although I am a bit concerned on the weekly chart. You can take this one, Pedro.
Yeah, well, thanks. I mean, that's the question that we've all been asking ourselves, right? When is this stock going to get away from this sideways
That's what we're asking you. When's it
Yeah,
going
well,
to go?
I would just, ask the question myself. But let's get into the chart and have a look at what's going on. So we've got the monthly on the left. Let's expand that out because he did buy on the monthly. So he bought over in July, and I can see a rule there. So well done for finding that rule, but it has turned down on you. So, and I can see how it's he's kind of probably sweating a little bit at the moment.
But let me ask you this. I mean, you mentioned that there was a rule on the chart in terms of buying, but when you're looking at stocks, and give us your perspective on this, are you looking at the whole picture of things? Because just one line through here and one look at the big picture,
exactly
because
right.
you're on the monthly chart, considering the monthly chart, when you try to line up, because at the end of the day, it's all about lining up your risk reward in every trade you take. What's the upside?
Exactly.
Where is it likely to find resistance? And when you apply that line through there, is that a good place to be getting in?
100%. And I mean, talking about that rule has triggered. I can see that the rule has triggered multiple times in the past as well on this sideways move. So it really depends whether you're trading mechanical or whether you're bringing in that art, that price analysis that you mentioned. And definitely seeing that line of resistance like we're seeing up here around that $315, you wouldn't be entering around that until you've got that confirmation that it's cleared above that. So to answer the question very basic, when is it going to stop trading above that sideways movement? Well, it's going to be when it trades above that $315 mark. So you've entered, you're in it right now. I know that you mentioned you are concerned on the weekly chart. So yep, it is looking a little bit bearish. It's closing on its lows. It does look like it's pointing down. I wouldn't be surprised if it traded down to the low of 265. But I'm sure you've got your stop loss in place. So I would just say,
hopefully.
Yeah, I hope that you do. So I'd be just enacting that stop loss if you need to. And make sure that you're applying everything that you know at the one time to your analysis before taking an entry.
And also depends on whether it's short, medium or long-term type of intention for the trade. So if it's more medium to longer term, I'm probably not too stressed about it at the moment.
Yep.
Short-term, whole different ball game. But anyway, that is it for our take on CSL. Now moving on to something very exciting, and that is trading strategy. So strap yourself in, this is going to be a ripper. What are the most popular ones and how successful are they? Now we're going to get into that shortly, but before we do, what is so interesting with trading strategies is that if you ask two random traders about how they trade, you'll get two completely different answers. Now throw on top of the thousands of indicators available to new traders, and the potential strategies become endless. But once you get through the shiny new indicators and realize that the market at its core isn't as complex as it is presented, you find out that you are implementing one of three basic ideas to capture profit from the market: trend following, mean reverting, and news trading. It's really as simple as that, isn't it, Phil?
Yeah, it sure is. I mean, as you know, there are so many indicators, shiny things to analyse the market, but really the market is only doing one of three things at any one time. It's either going up, it's either going sideways, or it's either going down. And within that process, you're either trading with the trend, or you're either trying to catch tops and bottoms, which is that mean reverting type, trading against the trend, or you're trying to trade some volatility in the form of news-related volatility that comes with that type of strategy. So one of those three things is either happening regardless of what indicator or tool you're using.
I know, but I mean, I've been mentoring, teaching traders for nearly 3 decades, and they're always looking for the holy grail of something, some new whiz-bang algorithm or whatever it is. So it's always something shiny and new anyway. But so let's get into the first strategy, and that is trend trading. Now take a look at this from Investopedia, which defines a trend as the overall direction of a market or an asset's price. An uptrend is when the price is making higher swing highs and higher swing lows, whilst lower swing lows and lower swing highs mark a downtrend. Uptrends and downtrends occur in all markets, such as stocks, bonds and futures. Seems simple in theory, but is it really as simple as this, Phil?
Look, it can be. It really can be. But what I find that a lot of people get mixed up when they're dealing with trend is a lot of people try, especially with the way it's marketed. I mean, let's be honest, day trading is marketed, and it's very much marketed to you to be trading those really short-term timeframes. Now, trying to dissect or identify a trend on a 1-minute chart or a 5-minute chart is impossible, because trading with trend means trading with the overriding movement of that market, and that is always done on the highest time frame possible. So that's where trend trading is definitely a valid approach. I mean, it's always run with the tide. Have a look at the S&P 500. Try trade against that trend over the last 5-10 years. You'd be creamed every time on the way up. And so, that's the point. Really using it to its correct potential is what it's all about.
Well, what is a trend? Is probably the question, isn't it?
Well, that too.
That's a whole big. Well, anyway, if you search the success rate of trend following on the internet, you will see this showing a win rate of 20 to 40%. Agree or not agree, Pedro?
20 to 40%. That sounds a little bit low from what I've found anyway. It's a little bit rubbish to be honest. And I mean, you have to add context behind this. What did they use? What actual rules did they use? What is a trend? Like Dale mentioned before, what do they define as a trend? So when you give an example like the turtle traders, Richard Dennis, they amounted $175 million over that trading scheme, that program that he ran, and they had a win-loss ratio of 80%, over 80%. And our students are doing at least 60 to 70% win-loss ratio. We wouldn't even get out of bed for 20 to 40%,
No.
Yeah, so it's... I don't believe that. I'd like to see the data behind that, because you really need to add context behind these things.
Yeah, I know. 70 to 80% is normal for our students.
Yep.
And even 90% on some stocks, depending on the stocks and the strategy.
Especially if it's trending.
Especially if it's trending.
Oh.
I mean, that's the whole idea. Trend is your friend. Trade with the trend, all of that sort of stuff. So
Exactly.
I mean, that's the most successful strategy out of it anyway. But how about you bring up a chart and put some context on those numbers, Pedro?
All right, let's get into the charts then. So on your screen right now, we've got Cochlear. So you can see that if you tried to go against the trend here in Cochlear, you wouldn't be, we've got the monthly chart on the left first of all.
But isn't that important in itself? I mean, we've got the monthly chart here, and it really allows you to see the direction of the trend, where so many people would zoom in and really get caught up in a lot of that noise of the market.
Exactly.
When you look at that, I mean, it's so. How do you go
against
out of that?
Yeah, that's right. I mean, in this sideways trending market, so this is where you, if you trade with a trend, it can actually get you out of these sideways trending markets. You could just put a simple trend momentum line, as you guys call it. So where do we have it here? We've got it there in the trend lines. Yep. So if we just put a simple trend line on it, just underneath these moves here, you would have been out around this sideways movement, and then you could get back in around that movement there, and then now you're back in the trend moving up. So, and now you'd be out of it again. So all these what we're saying is, and this is on the monthly chart, what we're saying is that if you trade with the trend, surely, I mean, this is over how many years? 2014 to 2020. It's a lot of money there that you're leaving on the table. And if you're using all these whiz-bang indicators around that, you'd be in and out. You'd be out when you shouldn't be, and you'd be in when you shouldn't be.
Look, I totally agree with it when you're comparing the trend lines to different indicators and everything that people use. But you know, it does. You do need to put it in context: short, medium, long term. You know, who were they talking about, or who were they interviewing on their statistics to get that 20 to 40%? All that sort of contents, anyway. But let's have a look at the next stock.
All right, let's have a look at XRO now.
Zero.
So zero is, look at that trend. You know, you can't fight against that trend. Let's have a look at the monthly chart again. So once again, have a look at that uptrend here from 2015 all the way up to 2021. Don't tell me that that's, you know, got a 20 to 40% success rate, you know, just following that trend. And then, you know, you could have some rules around here to get you out of this actual, you know, downward move, and then you'd just be back with the trend again. So it's a beautifully trending stock, this one. And at the moment, you know, you just put a trend line underneath it and just ride it all the way up.
And this isn't, you know, a one-off example.
No.
You know, most stocks, it's a growth type, you know, space, stocks. And you do see stocks go through their cycle. They do trend, especially when they're on that growth phase of their cycle. So these two examples is just two of many that happen in the market consistently, time and time again. You know, most of the top 20 stocks, you could replace them with these two and you see really strong, nice growth type moves. Find it out even into the mid cap. So those opportunities exist so much on our market. It's just about, as you said, identifying what is a trend, using the right timeframes to trade a trend, and then 20 to 40% seems like a joke.
This is the easiest type of trading you can do.
The best.
And the most profitable in my book. But have we got another stock?
Yes, we do.
Yeah.
All right, so let's get into CBA. So actually,
we've moved a little forward here, Pedro. You're giving away too many
Oh,
secrets.
this is the secret part of the show.
I've moved too much forward. Sorry, go, Dale.
You're giving the secrets too quick, Dale.
Take back control of the show, Dale, and get moving. Anyway, all right. Well, I'm glad we cleared that up. That one up, and it shows that you need to be extra careful when you get your information from. Now, moving on, let's get into the second most popular trading strategies, and this one I would argue is probably the most popular. It's called mean reverting strategies. Now, you happy to explain this one for everybody, Phil?
Yeah, I sure am. I mean, basically what we're referring to here is stocks that, or any type of asset class that is moving away from the natural gradient of the trend, those euphoric, expansive type moves, both on the upside and also on the downside. And generally the theory is that the market will go back to its natural gradient. And so people or traders look to trade the reversals from the top and also the reversals from the bottom on the way up. And it's just, you know, as the name suggests, reverting back to the mean of that natural trend, which, you know, can happen in markets. And, you know, it is very, very popular. We're going to get into that a little later on. But
You've got this smile on your face. I think it's like a cheeky kid.
Well, I am because
hiding something.
I am because I mean the marketing around this type of trading strategy. It is the most, in my opinion, from what I've seen, it is definitely the most popular type. It's being marketed that because it gives you that euphoric, it gives you that confidence.
But 80% of traders lose statistically.
Well, we'll get into that very soon.
That's why they're just so easy to apply as well, isn't it? I mean, you just click the button, click it on the chart, and there you go. So suddenly, you know, you think that you're trading with this secret tool, but basically everybody's using the same thing.
Basically, everybody's eating the same lunch. That's what you're telling me?
Exactly.
All right, so you're not going to get much of a serve. Anyway, well, now the reason this style is most popular, especially amongst new traders, is because most of the well-known indicators are designed for mean reverting strategies. Open up a new broker platform and it will automatically place indicators like RSIs and Bollinger Bands, all designed for you to see the market from the mean reverting perspective. Now, I'm going to get your thoughts on these indicators and this type of trading. I'm going to go to you, Pedro.
All right. So yeah, like Phil mentioned, these are, you know, mean reversing indicators. So basically, it's the opposite of what we mentioned earlier with trading with the trend. Basically, so you're buying when the trend has reversed, in hopes that it will reverse back into that. So you're buying low to sell high. But think about why brokers put these tools in there in the first place. They want to make it as easy for you to be able to apply them. And you know, you could be catching a falling knife at the end of the day. You know, you're going to be buying where it's at the most dangerous time of that stock.
Well, no confirmation, and two, it plays in. Think about how it plays into the psychology of a trader or anybody. Being able to pick a low or pick a high, that feeling that you get thinking, hey, you know what, I'm a genius.
Ego thing.
Right, it plays into that ego so much, that type of trading.
Wow.
Yeah,
You
definitely.
think you're getting the best entry price, the highest risk reward type scenario, all of the things that sound good on paper, but without confirmation.
I think, I mean, without being rude to people, I think trading on indicators just makes you dumb. Because you forget about proper analysis. You're actually just relying on one of these indicators to get you the buy signal, but the traders don't fully understand what they're doing.
And you've got to think, a lot of these indicators at the end of the day, they weren't initially designed as buy and sell signals,
No,
right?
they're not.
Like a moving average tells you how far price is away from a moving average. Not intended to say you should buy here or you should sell here. That's how we, or humans, interpreted that. And then also you've got, these RSIs. It's supposed to mimic, price and where it's overbought or oversold. But at the end of the day, it is not was not designed to say you should be buying here, but humans have made it this way.
Well, they have. Now, what's interesting is that if you search the success rate of mean reverting trading strategy online, you'll see it says highly successful. So let's put that to the test using RSIs. Now, go for it, Phil.
Well, this is why I was smiling before. But all right, so let's start off with CBA. Now, all I've done is just apply the standard setting RSI on the chart. You can see here, this is the chart of CBA. And we're going to, given the theory out there online is that this is a highly successful type strategy.
Yep.
Let's put that to the test and see, because the idea is these signals when the market moves over this blue line, meaning that the market is now oversold, that means that the market should be ready to be, you should be placing a sell order.
Yep.
Basically, that's how these
That's
strategies
overbought.
work. Overbought, sorry.
Over the
Overbought,
70
yep,
mark.
over the 70 is overbought. And when you see it in periods through here, it means that it's oversold, so you should be buying it. And so anyway, as a stock runs up, generally what you see trending type stocks in the asset class of stocks, we've got multiple occasions here in the pink rectangle where it's touched over the 70% level. So imagine you were selling all these times through here. Does that look like an 80% success rate?
No.
And so this is the issue with these kinds of indicators. Using them solely as buying and selling rules, you're not, as you said, looking for confirmation. You've completely forgotten about reading the only thing that matters on that chart, and that is price, and becoming skilled at looking at price itself and letting that tell you what it's doing. And so it basically, as you said, it makes you, can I say the word, dumb to some degree?
Well, that's what I said. I don't want to be rude to people, but the people aren't dumb, but it can make you dumb.
Doesn't want
as
you
a
to think.
trader. Yeah. Have we got another stock?
Yeah, we sure do. We've got a second example here, which is, if I can see, Wisetech. Another stock, which is in its growth phase moving up. Now, these indicators may work in some markets where you do have range-bound sidewaysy type moves, but I mean, you really need to put that to the test again itself, because there's no confirmation in all these things. But again, another example, we've got RSI ticking over the 70% level. Each of these rectangle boxes presents that where you could have sold. There's one example here where you could have made, quite a decent capture of profits through here. But even though, and this is where it can get tricky for individuals, because you're seeing that you might get little movements down, but those little movements, when you start to factor in where you're going to get in, you start to factor in where you're going to get out, you start to factor in the cost, the spread, all these kinds of things, they get eked out. It's not even worth the time to be looking at that kind of strategy in a bull market that is running on up, relative to if you flip the script and say, I'm just going to ride the trend.
Yeah. Now, but both of you weren't trading the run up to the GFC, and you saw how these indicators, Janine and I were studying them all that time. I mean, I did a lot of study, sort of from early 2000 all the way through, with all of these indicators against what we teach in trend lines and the other things that we're teaching. And I constantly found this sort of stuff. I found that the indicators were giving you false signals or telling you that you should be out or in at the wrong time. And the bull market, they became really ineffective. And there were so much easier ways to trade. That's why, I wrote my book and wrote the course. Now, am I allowed to say there's another stock?
Yes, you are.
I am.
There is one more.
There's one
There
more
is
stock,
one more.
everybody.
Yes.
All right. Now, this one's Cochlear, I believe, we've got on here. Yes.
Yep.
And now, this is the whole point. Again, we've got this comment, while some short-term pullbacks have a look big picture. Is it finding real reversals in the trend?
Yep.
And what will make you more money at the end of the day? Because that's the
Yes.
most important thing. More money, safer trading, less headaches, and to some degree, less trading. Because the less you trade, the less you're going to pay to the broker in costs.
Correct. I mean, I know when I was, speaking all around Australia at expos and everything else, and saying to people you should use trend lines, and everybody was using at the time, everybody was moving averages, multiple moving averages, these are great. And yet I proved time and time again, if you use trend lines, you'll make more money and have less trades. I don't know about you, but I want to trade more and make less. And give the brokers more money, but that's how it works. And it's still that same today. It's not necessarily listening to all the noise that you're talking about.
And can I say that the biggest takeaway I think that people should get from this as well is see what we're doing. We're back testing essentially here. We are looking at the chart and seeing the instances where we would have been correct and where we wouldn't have been correct. So do the same thing, copy it. Always be the back tester. Always check the signals yourself, because then you're going to be more confident when you do take these types of things.
All right, well, I'm sure everybody found that quite interesting. But anyway, moving on, we come to the third most common trading strategy, that is event-based trading strategies. Now, basically, it's news trading. Now, you've had experience with this, haven't you, Phil?
Yes, I mean, the FX markets have...
Ripe.
Ripe for news events. There's almost one every day, and they're classified. There's calendars out there that alert you to the timing of when these events happen, and price does get very volatile around these time periods. So, it's interesting. There are a lot of factors that need to come in play as well, because brokers widen their spreads around these time periods. They make it very unattractive, if you will, to capture the volatility that would be nice to capture, but you need to factor all these things in, because when it looks too good to be true, it often is.
Yep. I was thinking with these news-based trading strategies, a toilet break can be very expensive. There are also events in the stock market that are commonly used for trading strategies. Now, I think you've got a few of those, haven't you, Pedro?
Yeah, so, company announcements, financials, if they come with the reporting season, that's a very popular one. If they come out with good reports, bad reports.
Does that even matter?
Yeah, of course. Yeah, sometimes it doesn't even matter. But people that do trade on this news, and you have to be aware that the big whales out there, the big institutions that may be trading against this news. So they're selling onto the news. You're thinking that it's a good news for the company. You're getting in while they're selling into it because there's higher liquidity, because they know that people are buying into it. So events like that, just always be aware that there is that other side of the trade. And it could be many types of events, anything that has to do with the company, and the CEO has an affair with the secretary or something like that.
That never happens either.
You get those types of things.
When Janine's not here, everything gets one up, doesn't it? Jeez, don't tell Janine anyway. All right, well, how about we bring up some examples of recent news events on the charts? I'm going to go back to you, Phil.
Yes, all right. So how about we start with AD8. Now, this one, quite interesting. It had earnings on the 6th of 8th, 2024. It was the half year 24 revenue. And what was very interesting about this one was that it actually beat consensus by 10 and 20% on the revenue and also the EBITDA. So outperformed what the market thought it was going to do. And have a look at the way it performed.
We'd think you'd be buying it, wouldn't you?
Well, you would. And what's also something to factor in with these news events, because there's three types of models. You're either trading before the news, during the news, or after the news. Now, when it comes to stocks, because markets close, if the news comes before open, then there's no way you're going to be trading during. But if we go back to the chart, what's real interesting is that you can see in this particular example, the market was falling into the news, and even though the news was positive. So you've got to ask yourself, throughout this whole period here from April 2024, now we've got half year earnings, at some point there would have been, I guess, knowledge that, hey, we're going to come out with a good result here. All that while price is falling on the way down, that kind of price action would resemble that the news wasn't going to be great. And then we get a huge breakdown in terms of the news. But what's quite interesting is that it's actually held from that huge drop. And so what I'm saying here is you've got to really keep in mind, it's one thing what you think the news might do, and it's a whole nother ballgame what the news actually ends up doing. So really factor in on, if you are looking to trade this type of environment, how you're going to do it, because doing it prior is probably not the best way. I would say potentially after the news comes out.
A lot of people do. They buy on that speculation of something happening, and then they sell into the actual fact sometimes too.
Yeah.
But anyway, have we got another one?
Yes, we do. We've got another example.
I'm being cautious about asking. Don't get it wrong.
Now, this one's another interesting one. We've got Xero. It came out with its half year 24 results. Now, it came out with the results. Price is falling leading up to the result. Now, you've got to ask yourself the question, why is price falling? I mean, if you were just monitoring price on its own leading into the result, you'd be thinking, okay, there's selling happening potentially, but they're not coming out with a good sign. Shares are being dumped off the market, and all of a sudden news comes out.
Yep.
And the frustrating thing for that is if you're not in the stock already, you're going to wake up once the news comes out and have to make a decision on whether I'm likely to now get in after the stock has already gapped so much higher.
Out. Yeah.
And so then that's when the decision needs to be made. And in this instance, if you were to make that decision, there was still profit potential on the upside following, but it's really, again, honing in when you're going to be doing that and understanding around these time periods.
Well, it depends on when they're doing the announcements. If they wait for market close and then do the announcement, the next morning it could just be gapped up or down massively.
Yeah.
So you don't have a chance to get in at a good price.
No way.
It's already moved
Yes.
from that point of view.
Exactly, and as a sophisticated trader, you wouldn't be entering just purely on that news. There is a rule around this area that you would enter on, so you're always looking for confirmation, never just on the news itself. You wouldn't be entering on this bar alone.
Yeah, well, I think it shows, doing after the news potentially is the safest if you're going to do this. But we've got one more stock, which is Wisetech. Now, another interesting case scenario, Wisetech.
Big move last week.
Big move, yeah. And this was even the August move coming out after the earnings. Runs up quite strongly, good earnings, outperformed, runs up, and then obviously we saw the capitulation. So the point is, whilst there is volatility around news earnings, expect volatility and expect erratic price action. And with erratic price action, it is very hard to undertake trading strategies and really, capture clean, strong, safe moves in the market. It's you can almost make it akin to flip the coin, and if you get it right, you get it right.
Well, to me, I always look at it with the news. It's like if you found out about it, then everybody already knows about it. There's nothing like, oh, this is secret just to me.
Yeah.
And the big end of town generally know, the big players generally know what the announcement's going to be before it hits.
Yeah, because there's never
one way or another, but it's not
no insider
legal.
trading.
No, there's not, but they've got a good idea what's happening with a high degree of accuracy because they have a lot of the chats with obviously the company, so they generally know what's going on, and they use that information for their benefit, not for the retail traders' benefit. So is that the old stocks? Can I keep moving on?
You can,
all right.
sir.
Okay. Well, thanks for that, guys. Now stay with us as we'll be right back after this short break.
This week on Talking Wealth, Dale and I discuss the top 3 stock picks in the biotech sector.
Again, it's a nice performer. If you look at that, it has big dips through it all. Like ResMed, it's starting to move up quite nicely. If we turn around and start breaking through all these sorts of areas, then I think this is a nice looking stock at the moment. I reckon I put all of them in my super fund because I think they all look good moving forward for the next 3 to 5 years.
Learn how to win at investing by minimising your losses with John Addis.
Save regularly, put it into a low-cost managed fund, and don't sell. Most people should be doing that. You need to be willing to lose money. You can't do this without losing money, and you have to just look at those losses as your education.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth.
All that and more this week, only on Talking Wealth. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03929 09988. That's 03 for Melbourne 929 09988, or you can text the number on your screen. Now whilst we wait for your call, let's get into our next email. Now, Willem writes, thanks for a great show. I am a recent graduate and so glad I did the course. Thanks, Willem. Now, would you comment on NXT? It is currently in a continuation pattern with an uptrend line almost confirmed, assuming a high tolerance for risk. Would you consider a buy with a tight stop if the trend line confirms this week, or would you wait for a break above the continuation pattern? Once it breaks, this would likely head towards $22. Interesting one, hey? How about you, Phil?
All right.
You ready for it?
Yes, sure. Willem, good
Last
stuff.
week he wasn't ready for one.
Let's go to the chart there and have a look for you, Willem. But what's quite interesting to me, I mean, we've marked our trend line through here, and it looks like the stock has broken through the trend line right now. But what is really interesting about this stock, and viewers of this show would know, when you see movements like this, I'll mark it up with a rectangle. When stocks consolidate in this sideways type fashion, it's really screaming to you, telling you that, hey, get ready for a move either on the way up or on the way down. There is going to be a directional move very soon. Stocks don't stay in agreement for very, very long, right?
Yep.
And so right now I quite agree with, if it can get its head above, $18, $19 and break out of this congestion, $22 is a very real target, definitely. But the question is, will it do it? And how will it do it? And so you've really got to ask yourself, sorry, I'll just zoom that out. You've got to ask yourself the question, two things. First, get above there and see how price reacts through that level. That'll give you the indication if it's got legs to $22.
He's implying he's using a rule that when the uptrend line confirms, it's a buy. Now, I've never heard of that as a buy rule.
No,
that's right.
No, we don't.
So can we help Willem at all?
I was going to say, Willem, and I have seen your name around. I wasn't your assessor, but I have seen your name around the course, so hello. I'd say go back to Module 3 and really have a look at the rules around there that we teach. But I like what your thoughts around this continuation pattern here, and I do like the stock.
Okay, so what should you suggest he do right now? Because obviously if an uptrend line confirming is not a buy rule, what do you think he should be doing?
Well, I'd be looking at Module 5 in this case and looking at any rules around continuation patterns.
Yep.
And I'd be looking to apply different rules and do your back testing. So have a look at, back in areas like this, when it was in a sideways consolidation, what does it generally do? How long does it take? Apply all the analysis that you learned through the course. Do your back testing, but I do like what you're thinking around this pattern over here.
And Willem, if you've still got access to Trading Essentials membership, I'd actually send the email into them and send your trading strategy into the team, and they'll help you work out what the best strategy is on that stock for you. But anyway, the next question we have is from Ramesh, asking any thoughts on S32 at the moment. I am already in it and would like to add another lot of S32 shares to a different portfolio if it shows the right signs from this point. I'm waiting for a move up and close above the $3.80-ish level, but worried about resistance at $4. I'm going to go back to you, Pedro.
All right, so I'd say let's get straight back into the. Oh, actually, first of all, let's say that rebuying into the. Let's hold up a second. Let's move back. So you're already in the stock now, and you want to buy again. I'm not sure if you have done the course yet.
Separate portfolio.
Separate portfolio. Okay, so you're looking to enter in a separate portfolio. That's fine. If you've got the same types of rules, or if you've got separate rules, I'm not sure. But I just wanted to make sure that you're not dollar cost averaging, because that's not really the best way to go about this. But let's get into the chart now and let's see what he's talking about. So we've marked the $3.08-ish marked here on the weekly chart. And that's where you're looking to get into. And you're quite right. This $4 level is a very strong resistance level. So you're right to be concerned about that. How much percent do we have up there? We've only got 5%. So if you were to, put a stop loss of, below this low here, then you're risking 8% essentially to make 5%. If you've got your 15% stop loss and you're down here a bit. So I would actually wait for it to close above this $4 level, because have a look at this. You've actually got a lot more further upside to go to reach this next strong resistance level up here. So you've got 20% as opposed to reaching this very strong resistance level here. So I can see your thinking around it, and it does look nice. It looks like it's continuing this upwards move, but I'd be waiting.
Any words from you?
Yep, totally agree. It's all about the.
Is that enough? Let's go on. No.
No, it's all about
I totally agree.
No, it's all about the risk-reward scenario, mate. If it doesn't line up, then being patient will pay. So.
All right, there you have the wise words from Pedro and backed up by Phil. Now we've got a text from Paula, and Paula says, good evening and thank you for the great shows. Our pleasure, Paula. I would like your opinion on uranium stock BMN. I bought the stock in January 2024 around $2.60 and sold in May around $4.50. Currently have it on my watch list for entry again and would appreciate your view on the stock. Thanks, Paula. I'm going to go to you.
All right.
You love
uranium. I do. All right, Paula, good choice.
Normally not normally the person in that seat doesn't like it.
Let's go to the chart and have a look for you, Paula. So Right now, what was the question again? I got caught up in.
She's bought and sold it this year, made a good profit. It's on her watch list now. and
Sold
she's
in May.
Looking to buy again.
Now, did you sell in May and go away? Is that the whole reason
Probably.
why? Yep.
Yeah. All right. Let's have a look for another opportunity here on this one. Right now, I don't mind what this stock's doing. Again, you know, we're always talking about one, not trying to catch falling knives. Two, letting reversals unfold with confirmation. And then three, understanding the relationship between the buyer and the seller. Right now, I'm seeing three of those things line up with this particular stock. If we go to the weekly chart, clearly we had this, you know, since breaking through to that new all-time high, we had a natural reaction, which can happen with stocks when they break through to new all-time highs, albeit this was quite a significant one. But what was quite interesting is it pulled back into this level of price agreements around $2, which was such an important level. You can see it hover through there for a very long time. Found a nice base from it. But a base isn't just enough. We want to see the reaction. The reaction was really strong buying. And now we get to see the opportunity as to whether this is euphoric, dead cat bounce type buying, or whether this has substance with real strength. And right now, given the way we've pulled back for 3 weeks, we're pulling into when the buying really started, the strong buying. And so right now it is that line in the sand moment. I would say I would be looking really closely to see what price does from here. If we reverse back up from these levels and take $4, then there's your confirmation that this is, you know, sustained buying. And so, you know, with the volatility here, you're going to get another opportunity. If this is a significant low and we're going to break back out into another uptrend or the next leg up, well, we're going to be attacking that all-time high.
Wise words from Phil there, so well done. If you want to give us a call, on the number on your screen, also 92909988. We'd love to have your questions answered on the show live. Now, our next email comes from Gumby. He's asking, what weighting would you give market entry criteria for a short term, let's say 3 months, long position? For example, in light of your previous show advising that the All Ords is due for a temporary correction, would you wait for greater overall strength of the market to line up prior to making any moves under the all ships rise on the same tide philosophy? Or is this trumped by the we don't trade the market, we trade specific stocks idea? I'm going to go to our resident assessor, Pedro.
Nice question. So thanks for that. So the basic answer is it depends. So
Just like a good assessor.
You have to have a look at a few things here. So of course, you're not trading the market, you're trading individual stocks. But just remember that the top 20 stocks make up the majority of the market. So
half of the market, yeah.
Basically, so if you're trading those top 20 stocks, they're going to be very similar to what the market is doing, especially the financials and the materials in those top 20. Now, if you go a little bit further out to the mid caps and to the more smaller cap stocks, it doesn't really matter that much because they don't really move the market. So yes, a rising tide will lift the ships, not all ships, and it does it gradually. As you can see, when the market starts going up, it first the top 20 starts rising, and then it's a top 50, and then it's a top 100, and then slowly the money trickles into the smaller cap stocks. So while you do use it as an overall indicator of the market sentiment itself, you're not going to trade individual stocks just solely on that.
You want to add
Totally agree. Yeah, no, I totally agree, because at the end of the day, I mean, you know, take for example, all you need to do is look at sectors. Materials and energy all the way down, financials up. And so, you know, trying to, you'll be missing on so many opportunities on good stocks that are rising if you're thinking just, hey, I'm only going to trade when the overriding market is up, or I'm going to stay away when the overriding market is down.
Well, it's context, isn't it? And this is really what Pedro was saying, because it's like he's saying 3 months, but then he's used the context of, we said the market was due for a short-term pullback. So what's a short-term pullback in time and price? How many days, weeks, and how big a price it was? Now, when we were talking about that a few weeks ago, we were saying the market could either rise up for a couple of weeks and then come down into mid-November to the end of November, or it would reverse and go down for 2-3 weeks and then flip. Not big moves either way. So again, it's going back to the stock, isn't it? And looking at the context. So
well, that's you're taking stock-specific risk when you trade, and it's more than just a broad index. I mean, you need to factor in the individual risks with that particular stock. So of course,
the short answer is trade the stock, not the index. Anyway, and we now have a text from King, and King is saying, hi everyone, could you please look at FID? It has a long-term uptrend at the moment and would love your thoughts. Thanks, King. King's a regular on our show in giving us questions and everything. Always great questions.
Right, yes.
What are your thoughts, Pedro?
Cheers, King. So thank you. Let's get straight into the chart and have a look, because I actually haven't heard of this stock. This isn't a stock that I've...
King's educating you now.
He is. Very nice, King. So let's see if this is a winner. It's recently crossed above the all-time high, and we're on the monthly chart at the moment. So how far above the all-time high is it? So it crossed about 3% above the all-time high. But have a look at this monthly. So we've got the October there. So right now, November, I mean, we're just at the start of November, but it is looking like it's moving down. So many stocks will reverse once they hit all-time highs. So to really have a look at this, let's have a look at the weekly chart to see what's going on with the price action there. And
the volume.
Yeah,
whoa,
huge volume there on this down bar. Now the week isn't finished yet.
That's either yesterday or today, or both.
Yep. Well, actually, we can have a look at the daily chart. Oh, look at that. Yep. So that was today.
Mm-hmm.
Today. So this has been sold off. There must have been some news or something that's come out back here as well. It's very gappy. This must have been some news. So we're in August. So August was around reporting season. So they must have reported something around here, very positive, and then maybe something negative around here. And this is probably one of those trading with the news stocks that you were talking about, Phil.
So you'd suggest King go and look at the announcements and see what's happened?
Definitely. Have a look at the announcements. Have a look at volume over here. Look at the larger time frame. But I don't really see many good prospects for this stock at the moment, unfortunately.
Phil?
Yeah, I mean, look, it's not uncommon for it to trade reverse around breaking through to new all-time highs. To me, it's all about analysing the way that it's moving into the all-time high.
Okay.
Is it moving at full euphoria, or is it moving in nice steps, legs up, legs down, healthy buying, healthy selling? Whilst there is that, the overriding concern is that huge volume on the sell bar today. Check that out before you make any moves.
Yeah.
Perfect. Great advice there from the boys anyway. Now, Chris is now asking about whether there is a current buying opportunity in FPH. He says, I have completed some backtesting on Fisher & Paykel Healthcare Limited. However, the question is when to enter, as it has recently pulled back after trading through its all-time high. Would it be sensible to wait for another buy signal before entering, or have I missed the bus on this stock? I'm going to go to you, Phil.
Yep. All right. Let's go to the monthly chart, or all the charts actually, to have a look for you on Fisher & Paykel. And again, another one of those propositions, stock running strongly, extension. But what's quite interesting with this one, we'll go on the weekly chart, is the fact that it has pulled back a little, and it is starting to consolidate in this sideways type of move. To me, the bigger question with these kinds of moves, or the way these charts look right now, with these stocks that have huge extension, is what's your time frame for your trade?
Oh yeah.
If you're thinking this is a long-term proposition, well, I would say probably not the best time to be looking at it for that perspective. If you have more of a short to medium-term mind frame on the trade right now in today's level, fine, go with it. Have you missed the bus? I don't think so in the short to medium term.
Yep.
I think the way it's consolidating sideways, there is potentially a nice opportunity if it can start to get going higher above that 34. If you're thinking of holding this for the next 6 to 12 months, year, given the way it's extended and what it has done in the past after these types of moves, is that you might get a period where it stalls sideways for quite a long while, or starts to reverse on you.
Because I mean, we are thinking healthcare stocks are going to start to move in this next year or so, with the market moving up and everything else. So you're still saying it's okay, but not long term.
Look, I love any stock, big picture, and in a sector that is moving. But to me, it always comes down to looking at the chart and how it's actually making those moves. And if it's making those moves in that really nice, uniform higher high, higher low, seller activity, really healthy, then fine, it's a good opportunity. But when it gets real extended, vertical 90 degrees, is 90 the way up? This way. If it's doing that,
If it's
be aware.
Right. So you're saying it's okay, but with some caveats anyway. Now remember to show your support for our channel and smash that like button, and do it now if If you enjoy our content, click subscribe now. Subscribing helps others find our channel so we can help them too. And before we let you go, what was your favourite part of the show? Was it a hot stock tip or a topic for the night, or was it a viewer question? Let us know by commenting below. Now, thanks to all those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting content, stock tips and insights and strategies. We'll be right back with that and more. Next week in our main topic, we get into the ASX tech takeover targets. Who's next in the AI and chip boom? Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each and every week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck and good trading.